Hello, welcome back. This is Roger Royce. I'm a partner with Haynes Boone in Palo Alto. I do emerging growth and venture capital, and this is the 10,000 Startups podcast. And this week on our podcast, we have Nikhil Sachdeva. He is a partner in the corporate practice group at Trilegal in India. He has a fairly diverse practice portfolio that includes mergers and acquisitions, venture capital, private equity, joint ventures, general corporate borrowing, and debt. He also specializes in structuring transactions to ensure compliance with foreign exchange, corporate laws, and tax efficiency. So today, excuse me, thank you for being here. And today we're going to talk about doing cross-border business, mostly in India, mostly on the U.S. outbound side into India. So thank you for being here. And let me kick it off here and just ask you about what is the business opportunity in India these days, and how is it different than maybe in past?
Thank you. Thank you for the kind introduction, Roger. It's good to collaborate with you on this podcast. On your question, what is the opportunity that lies ahead in India? It's the largest economy in terms of the number of people, so the largest market for consumers as such. You see a lot of trends as such in India where companies are moving into India. There are products that are moving into India because of the largest market in terms of the number of people. So what's focusing in the what is the new focus in India is the China plus one, I would say, from a manufacturing capability that India has to offer, the reliance in terms of the the labor force, the reliance in terms of the emerging legal regime, the reliance in the language. There is no language barrier in India. Everyone speaks English, so the world can interact very easily. I think that's what's drawing a lot of attention. And of course, we've got some world-class engineers, literally holding positions in key companies, Fortune 500 companies, I'd say. And now India is witnessing growth in deep tech, AI, semiconductors, biotechnology, and I think that's what's kind of making it very attractive for the global investors to come into India.
Okay, thanks for that. Now, I used to hear about business outsourcing or business process outsourcing in India, and I guess the term now is global capability centers. Could you tell us what that is and how U.S. companies can use that?
So what used to earlier be outsourcing platforms in India that was set up to provide back-end work and call centers, as you may call it, be it in healthcare or be it for financial services. What most companies are doing, because of the large pool of engineers available in India, they're setting up their back-end engineering teams for captive purposes in India. And today, India sort of seems to be the largest global capability center in the world, which is ever increasing. The latest statistics that I read, there are about 1.3 billion people that are being employed in global capability centers in India.
Okay, got it. Now, I've been aware generally that companies used to be sort of a lot of one-way traffic of companies from around the world coming into the U.S., especially here in the Silicon Valley. Lately, I understand that companies have been migrating the other direction, back towards India. And that's both for the markets, as you said, it's a big economy, but also to access capital through the public markets. Can you speak a little bit to that and what that process looks like?
So historically, India, unlike the US, started having venture capital investments just nearly about, I would say, actively about 2 decades ago, whereas US has seen that wave almost for about 6 to 7 decades at least, right? So the access to capital, the perception was that the access to capital is easier outside of India. Therefore, a lot of companies were setting up their headquarters or their holding companies outside of India, because investors also were more comfortable to invest in a jurisdiction which they know of, so that they could enforce their rights and would be privy to the legal regime in their home jurisdictions. But and also, because of this access to capital from a venture capital standpoint, also eventually the investors were more comfortable that the ultimate exit would be better in public markets in the US or Singapore and some of those mature markets which had seen startups setting up and then eventually finding themselves listed on a stock exchange. But lately, what's happened, in this small journey of the last 2 decades or so, finally we are seeing in the last 5 years, we've seen a lot of Indian startups being listed on the stock exchange, and now they are really driving. They're driving a lot of attraction from foreign, institutional investors, from retail investors, and they've grown multifold post-listing. Evaluations have grown multifold. So India as an economy is now sort of ready, mature enough to accept technology-led products, innovative products on public markets. And therefore that perception is changing. But and like I said, some of these products which were developed were more India focused, but headquartered out of US, Singapore, other jurisdictions. Because the market for those products still lies in India, they felt eventually that it's difficult to get correct valuations if they were to be listed on a stock exchange outside of India. So therefore, probably it's better they'd be able to get better valuations in India than anywhere else, because the market for them, the consumer, still lies in India. A lot of the companies and also set up again, like I said, venture capital has been in the US for far much longer period than in India. A lot of companies were required to set up in the US because of accelerators' preference to again have they would have a mandate that they will be able to fund only if companies were set up in the US and not outside of the US. Likes of Y Combinator and all, they have a mandate that you have to set up a company in the US.
Is that changing? So, is that changing? Is that why?
No, I mean, still a lot of accelerators. We've worked with a lot of clients across border, and a lot of these accelerator-led clients still have to set up companies outside of India to begin with. Mm-hmm. But eventually, they understand as the company grows, as the capital pool grows, as new rounds, funding rounds keep happening, more investors keep joining board. They eventually have to unlock that value through an exit event, and if it is through public markets, most of the companies where the business is India focused, they have to, we've seen a trend that they're all coming back into India, because ultimately, they'd be able to fetch better valuations in India. And India also recently, Roger, if I may add, in order to sort of advance this and promote coming back into India, the government has also come with a lot of changes in the legal regime, allowing cross-border mergers, which was not permitted so far, allowing cross-border swap transactions where you can now issue securities of an Indian company in exchange of securities of another overseas company. So far, the law stated that you can issue securities of an Indian company only if there is actual cash being paid to subscribe to the securities of an Indian company. So there is a lot of change in legal regime also to promote companies coming back into India.
Yeah, so that's a big change, isn't it? Because yes. I gather in the past, maybe the way we had to do those transactions were to have two cash transactions, right? We'd have a sale of shares, two sales in effect. So the money would go around in a circle. So acquiring company would buy the shares, I guess, or the shareholders of acquiring company would buy the shares of, well, maybe I should let you describe it, or better yet, since that's all history. So these days, what you're saying is that we don't have to have a sale to buyer and then a sale back to seller. Instead, we can have just an exchange of Indian shares for US shares.
That's right.
That's how we can affect a transaction.
Yeah. Yeah.
Okay.
We had to do a cash in, cash out transaction, if I were to call it that way.
Before we had to do cash in, cash out. Is that what you're saying?
That's right. Yeah.
Yeah. Got you. Well, when did that happen? When did that law change?
Oh, this was very recent, just about 2 months ago.
Oh, wow. That is recent.
Yeah.
Well, that ought to encourage some M&A activity, I guess, cross-border, right?
There is significant M&A activity cross-border, and of course, it's an initiative by the government to promote even more consolidations in India, right? Because now we're seeing a lot of Indian companies acquiring assets outside of India, so which is also helping the Indian companies to acquire assets which are complementary to their business outside of India, and this sort of helps is not only allowing a lot of international companies to come back into India, but also allowing a lot of Indian companies to acquire assets outside of India to have a larger global footprint.
I see. Okay, interesting. So tell me, have there been any other considerations in this sort of transaction? For example, I gotta believe because we had cash moving around in the past, we'd have to worry a lot about tax. Anything else in this transaction that's notable?
The tax, of course, is a concern that always Indian regulations are kind of conservative in terms of tax to ensure that because of a lot of these companies headquartered outside of India, while the asset still resides in India, right?
Mhm.
If there is, let's say, a company based in the US which has a substantial business through its subsidiary in India, and there's a exchange of acquisition of securities of this US company, the Indian government would impose tax on that transaction because the value that is being derived for those US securities is substantially derived out of the assets that the US company holds in India through its subsidiary. So, that's a peculiar situation in which the Indian government still tax an overseas transaction, which is, I think, not, and this is something that was done upon acquisition of securities of Vodafone back in the days. And then there was a change of law, right? Indian government sort of saw that there's a lot of opportunity lost for the Indian exchequer to, where they could not get any tax on just because the way corporate structures were set up, because the holding companies resided outside of India. So that way, of course, there are considerations from a tax standpoint that irrespective of being in India, you may be subject to tax considerations in India, subject to only if your business is substantially deriving value out of the assets residing in India. And then similarly, if there are transactions where between non-residents, there are withholding tax requirements. If a non-resident holding an investment in India is exiting from India, if India doesn't have a double tax avoidance treaty with the reciprocal country, then there are situations in which the withholding tax has to be deposited with the Indian government upon exit of a non-resident investor.
Got you. So I noticed in your bio you do venture capital as well, in private transactions as well as public. So tell me, is there a thriving venture capital industry in India these days, and is it growing?
Oh yes, I mean it is growing beyond and how, right? So again, latest statistics that I was reading, since 2009, India has seen about $109 billion of venture capital investment in India. And the focus is obviously changing. It's now currently on AI, deep tech, semiconductors, biotechnology. That's kind of driving the force. Again, like I said, India has a large consumer pool, so there's a lot of direct-to-consumer brands, a lot of edtech companies, which is finding a lot of attraction from the investors. So and venture capital is growing significantly in India, and investors do also have a lot of confidence in the Indian market because of the some successful exits that India has given. And the venture capital graph, if you would see, like I said earlier, the venture capital in India started only about 2 decades ago, whereas in comparison to the US, which is about 7 to 8 decades old, I think India has been able to give far more in terms of, if you were just to compare on a time proportionate basis, India has been able to deliver an exit far greater than what other economies would have to venture capital industry. There is obviously a shift that venture capital investors have had to deal with in the recent past because of certain corporate governance issues that some of the Indian companies have, which has become, globally known now. But that's always, there's always space for growth and more learning and better governance for these Indian companies. But it's growing significantly, as I would say.
Yeah. Do the VCs typically invest in India companies or Singapore companies, or will they invest all over the world? Because I know here locally, everybody says that the local VCs, they want to invest in Delaware companies. And that's changed a little bit, especially after COVID, and we got used to being online all the time. And now we're seeing Silicon Valley VCs deploy capital more readily outside this jurisdiction. What's it like for an India VC? Could a U.S. company go to India? That's what I'm trying to ask, and raise money.
Absolutely, yeah. So absolutely, there are a lot of non-resident investors investing directly into India. The regime in India, from a foreign direct investment standpoint, Roger, has opened up, liberalized significantly in the last 3 decades. There are only select sectors which are still controlled. But if you were to talk about tech per se, it's 100% without any government approval. There are only select sectors like defense, because of security reasons, where there is still a government approval required. Sectors like multi-brand retail, not single brand, right? Multi-brand retail and also single brand retail, where to a certain extent there are restrictions and conditions that apply. And this is only to protect the Indian small business owners, who've had small shops running their own businesses, of selling day-to-day goods. So it's open far more, and Indian companies do allow manufacturing. If you were to come and invest into India in manufacturing, it's 100%. So there are in telecom, there are again, some restrictions, but it's under automatic route. Healthcare also, it's under automatic route. So there are India, from a FDI standpoint, it is segregated on a sector by sector basis. So there is no, one answer that would fit all sectors that I could offer here. But yes, there is a significant change, and there are only select sectors which are under conditionality route now, if I may call it.
Got it. So tell me about the M&A. You do M&A as well. What's the M&A market like in India right now?
The M&A market, Roger, is growing, and there are a lot of consolidations that is underway, right? Because of the booming up of a lot of companies, startups becoming much larger, not only unicorns, now decacorns, right? So the larger ones are obviously consolidating assets so that they are able to see public market presence and list themselves there. And then again, similarly, a lot of private equity investors are setting up platforms to consolidate assets into those platforms so that they could then unlock the value of a larger, sum of parts is larger than the whole. So they're also kind of consolidating assets under platforms. There is, of course, from on the manufacturing side, on the automobile side, on OEM manufacturing of small automobile parts. On the edtech side, we saw a lot of consolidation. In fintech space, there's a lot of consolidation. In an M&A, in the healthcare space with hospitals and multi-fold chain of hospitals coming up in India and specialized clinics coming in India, there's a lot of activity in the M&A space. and it's looking even better, from a 2025 standpoint. And I was reading some report. In fact, even in Europe, they are pretty bullish now for M&A to grow. So I think that the market, India is obviously desired for global presence now by major global players, because you cannot miss a market and an economy with largest pool of consumers.
Yeah.
So definitely we're seeing a lot of attraction from an M&A standpoint.
Yeah. Okay. Well, thank you for that. And, with that, I want to be respectful of your time. I know it's very late where you are, and I want to thank you for joining us today. Any closing words for our audience before we sign off?
Yeah, closing words. If I would say that India as an economy is growing, and there's a far more, availability of talent and technology-related products. So, especially investors, I know they've reposed a lot of faith in the Indian economy, and I think this wave is going to continue for the next few decades, where you would find India present on a larger global footprint.
Okay, thanks. So last thing, Nikhil, how do people get a hold of you if they want to contact you?
Yeah, so I'm on the website of Trilegal. I'm partner with Trilegal. We've got a website. I could be reached on nikhil.sachdeva@trilegal.com.
Okay, got it. All right. Well, thank you very much. This is Roger Royce with the 10,000 Startups podcast. We've been talking with Nikhil Sachdeva about doing business in India, and we'll see you all next week.